Now we'll see few examples of internal controls. In categories wise, we'll see what are a few general internal controls that could put in place in a bank. So the staff and officers should be shifted from one position to the another without a prior notice. Shifting of the staffs and officers from like cashier is shifted often, right, for every 1 to 2 months. And work of one should be checked by the another, obviously. And all bank forms for it has to be under custody of two officers. For the first officer, it has to have the possession, and the second officer, what he has to do, he has to verify the issuance and the stock of the all bank forms. First one consists of all the possession of bank forms. Second one should verify all the issuance and all the verify the stock that was there in the bank, all with regards to the bank forms. And the mail should be opened by the responsible officer. And a HO should give a surprise inspection for the branches and all the financial what extent the bank manager could give the loan, or how much amount of money they could hold in the bank chest. And with regards to the cash, internal controls, internal controls with regards to cash is that cash should be joint custody, and the cashier should have no access to customer ledger and daybook because he could manipulate the accounts. And receipt of payment scrolls compared with the cash column of daybook by independent person. That is like mostly the concurrent auditors or the internal auditors. They have to compare the cash column of the daybook with regards to receipt and payment scrolls. And the high value cash receipts and payments by bank manager remit excess of branch retention limit to currency chest. When there were high value cash receipts or payments by any branch manager, you have to remit that excess for the branch retention limit. Every bank branch has some retention limit, right? In excess of that cash, they have to send it to the HO currency chest. And the counterfoil of cash receipt OCHOs should be signed by the officer in cash department and the receiving cashier. It has to be signed by the cashier and officer in the cash department. And with regards to clearings are mostly like a check or a e-check that was submitted to the bank for payment or under the check truncation system by RBI. This was a system which was stipulated by RBI with regards to clearings. And electric image of check, that is e-check, that is transmitted to paying branch through a clearing house. That channel from paying branch to receiving branch, the channel is known as clearing house. It's mostly like a Razorpay or Instomojo in our e-payments, right? That's the delivery channel. That's the clearing system delivery channel. And what should it consist of? We have to write about the details of the customer, and the bank has to be given in that e-check with details of MICR bank and date of presentation and presenting bank. Check the signature of the drawer. If not, liability would be on the paying bank. If the paying bank do not have the proper signature of the drawer, the liability would be shifted to the paying bank itself. As per RBI guidelines, bank should call or email if the amount is more than 5 lakhs or inward earnings. Then the officer in the cash department or payments department has to call or email. That is for extra confirmation if the amount is more than 5 lakhs or more. 5 lakhs or more. 5 lakhs is included. If it touches 5 lakhs, they have to give a call or a mail. Unpaid checks in outward clearing sent to the customers. Okay. These are with regards to the internal controls of the clearing. What? Under check truncation system by RBI, there should be an electronic image of check transmitter from paying bank to the clearing house. Through a clearing house, they have to mail. What all it should contain? It should contain details of customers and bank. What the customer details? You have to have the details of MICR bank, that is a barcode like, and date of presentation and the presenting bank details. And the with regards to customer, that signature details of the signature. The presenting bank the paying bank do not check the signature of the drawer, that liability would be on the paying bank. If that amount is 5 lakhs or more, the bank has to give a call or a mail, and unpaid checks in outward clearing sent to the customer. And with regards to bills for collection, all the documents accompanying the bills received are entered in a register, and at the time of dispatch, all such documents should be sent by the responsible officers. All documents accompanying the bills received, that was the money that was received for the bills sent for collection, have to be entered in a register. And the time of dispatch, as we have got our money back, we have to give all such documents. Who has to give? Responsible officer has to give. The customer account is credited only after bills were collected or sent for collection. Okay. And bills sent from one branch to the another, the receiving branch should reverse the entries for the purpose of amalgamation at the end of the year. That is, not to duplicate the entries while in case of amalgamation. So this is with regards to the internal controls of bills for collection. And for the bills purchase, officer should verify that all documents are properly assigned to the bank, that is in favor of the bank, and all the documents have been given. And the sufficient margin should be kept by whom? The manager. How much money he has to give by putting a sufficient margin to the bank for any decline in value of security. If the bills purchased are outstanding for the year end, the discount received shall be apportioned for 2 years. That is, if the bills purchase have a outstanding for the 31st March, what they have to do? 31st March falls in between, so the discount should be apportioned. And if the bank's unable to collect bill on due date, immediate steps has to be taken to recover that. Okay, all the irregular outstanding accounts have to be reported to HO. And these were all the internal controls with regards to bills purchase. What we have to do, we have to say check for the that all the documents of title have to be properly assigned and sufficient margin has put, and discount it should be apportioned. And if unable to collect, what I have to take? They have to take immediate steps for the recovery, like factoring or something other remedial actions for recovery of that bill. And all the irregular outstanding should be reported to HO. And with regards to the internal controls of loans and advances, prior to giving advances, what they have to do, what the bank manager has to do, what the officer should do, have to check the credit worthiness of the borrower. He have to check whether the sanctioning limit was within his authority or not. That is, within the powers of the bank manager or not. If they want it for more than 5 CR and all, HO has to handle that. So have to check whether who has to sanction that, sanction from proper authorities, and documents executed by the borrowers, whether they were legit or not. These have to be checked prior to making an advance. And sufficient margin should be kept to cover any decline in value of securities, any kind of, while giving any kind of loans. And with regards to securities should be of joint custody, likewise in cash. And it should be registered in the name of the bank. These securities, like any other property, has to be registered in the name of the bank. All accounts should be kept within. They're talking mostly about the overdrafts here. All the overdrafts accounts should be kept within drawing power and sanction limit. For the drawing power, additional 20% could be given as a temporary enhancement, temporary limit for a period of 90 days. Please remember this, it could be attached in an MCQ format. And this operation shall be reviewed once in and every year. That they have to check, follow up, or monitor these controls at least once in and every year. And with regards to the DDs, demand drafts, internal controls have to be the officer having signature book shall verify signatures on DD. Likewise, in e-check, they have to check the signature of the drawer, right? They have to also check the signature here. All DDs issued should be informed by paying branch to a by an advice. Advice is a kind of like a letter or type of information that was used mostly in banking systems. If the This is a kind of format of communication between bank branches. If paying branch do not receive proper information or do not receive credit, it should take immediate step. That is, it had not received the amount or the money that it has to receive. What it has for the recovery, it has to take immediate steps by communicating. And with regards to interbranch accounts, the account should be adjusted on advices, that is proper communications received, not on strengths of the entries received. That is, not on the entries that were received. What they have to do, only for the advices received, they have to adjust that. Adjusting is mostly like a reversing, not to duplicate the entries in amalgamation time, etc. And central authority should take prompt action if any entries are not responded by any branch. That's a gray area. And with regards to credit card operations, which is Asia's favorite question, credit card operations were so they have a lot of individual points, but it's so simple if we read it like this. With regards to customers and with regards to merchants, customers, they have two categories: payments, about customer payments, few internal controls; about customer balance or customer overdue, few internal controls. And with regards to merchant, this is mostly like a process kind of thing. Merchant, they have to check the limit and acceptance, reimbursement, periodic bulletins. Remember this as a category, and you are so easy to go to write the credit card operations fully, and you get all on points. A system to monitor and follow up customer payments. A system or an internal control system to monitor and follow up customer payments. A payment overdue beyond a reasonable period shall be identified and attended carefully. That is, customer overdue should be identified and attended carefully. A system to send statements regularly and prompt promptly to customers. That is about the customer balance. You have to send statements regularly and promptly to the customers. And with regards to merchants, a system where merchant confirms the status of unutilized limit of credit card holder. That is unutilized. That is still what balance that the credit card holder can do the payment for. System to prompt reporting by merchants of all settlements accepted by them to through credit cards. That is a statement that all the payments that they have received with regards to credit card transactions. A reimbursement to merchants after verification of validity of merchants acceptance of cards. Not only the acceptance of credit card holder that the merchant checks, but while payment, bank also checks the merchant's validity in accepting the cards. After that, merchants get their amount credited. Credit for defaulting customers is stopped by issuing their details in periodic bulletins to merchants. In addition to that, in addition to the reporting of the transactions that all settlements accepted by credit cards to merchants, they also give periodic bulletins with regards to customers, defaulted customers, to stop the issue. And in addition to all these three kind of categories, there were extra 2 points. That is effective screening of applications with reasonable good credit assessment. Credit cards were mostly like a loan, right? A small kind of loan. So while giving loan, what we should check for the credit worthiness. They're talking about that. And the strict control on storage and issue of credit cards have to be given. And these were all the credit card operations, internal controls with regards to credit card operation. That's so simple. Now we'll move on to the next topic, that is CRR and SLR. This is a quite important topic. It gets more often questions that were asked in bank audit. CRR is cash reserve ratio. What is cash reserve ratio? A minimum fraction of total deposits of customers, that is bank's customers deposit some money, right? A part of that money has hold as a bank shall hold as a reserve in cash or deposits with central government. They should not give all the deposits as a loan to other customers. They have to hold a portion of that either with them or with central bank, that is RBI. And SLR, that is statutory liquidity ratio. Every scheduled commercial bank shall maintain in form of liquid assets like gold, cash, or government approved securities. Liquid assets means mostly like financial assets, approved securities before providing credit to customers. Here they have to hold it as a cash. That is CRR. Here in a liquid ratio, liquid assets, that is in gold or cash or approved securities. Likewise, and SLR compliance is verified by statutory central auditors on 12 audits, not on Fridays, and send report to top management and RBI. It's an RBI. Okay. What that report shall consist of? That report shall consist of correctness of completion of demand and time liabilities position and maintenance of liquid assets under Section 24 of Banking Regulation Act. Once again, SLR compliance is verified by whom? Statutory central auditors. They have to give a report to whom? Top management and RBI on what? 12 audits, not being Fridays. Okay. And what that report shall consist of? It shall consist of correctness of completion of demand and time liabilities position and maintenance of liquid assets under Section 24 of Banking Regulation Act. And with that said, how do we audit the CRR and SLR? Again, we are categorized into three to four portions actually. Circulars and with regards to trade balance and consolidation and demand time liabilities. What are the exclusions and what are the inclusions? Exclusions with regards to few amounts have to be excluded while calculating demand DTM. And I will see. First, the circulars. Understand the circulars and instructions given by RBI and request the branch auditor to send weekly trail balance as on Friday. Here you see the branch auditors should ask for trail balance as on Friday, but you have to check the SLR compliance or not on Fridays. Remember that. And these are consolidated at HO. Okay. On test basis, examine the consolidation done by bank with respect to returns sent by branches. That is, branches send those returns, right? Trail balance reports that have to be consolidated by HO. What you have to do? You have to check on test basis the consolidation adjustments and that information that was relevant from all branches that is received. And auditor shall what? Describe the audit procedures performed in the report. Specify the unaudited branches. Develop audit procedures as ADF, that is automated data flow. And what are the exclusions for the demand time liabilities were? These were all the exclusions for demand time liabilities that were mostly the equity portion and mostly equity portion, the paid up share capital reserves and the P&L credit balance, and that is profit for the year or previous year, and a loan from bank, that's also credit balance, and a refinance from Exim, NHB, SIDB, or NABARD. Any kind of, you need not by heart these things, any kind of refinance. Remember it as that they do not test so in depth. Part amounts of recoveries from bad debts. You have to make a note of it. This is something really important. Part amount recoveries from bad debts. Amount received in rupees against import bills and held in sundry deposits pending receipts of final debts. This is a heading. If anything that was under this heading, when you receive rupees against that import bills and the amounts that were held under sundry deposits pending receipts for final rates, that is the final rate. We see that in IDT, the rate of import bills get fluctuated, right, with regards to few adjustments, few dates, that dates. Unadjusted balances like dividend warrants, interest warrants, and refund of application money, and margins like sundry deposits for funded facilities. Here, sundry deposits for funded facilities margins held, and here it's for sundry deposits pending receipts of final rates. That is with regards to custom bills. These were the exclusions. What are all the exclusions? All the equity portion, paid up share capital, reserves, P&L account, and loans from RBI. This was loans, like a loan from RBI and refinance from Exim and HB, SIDB, NABARD. And these were something that will have to make a special interest to remember that. That is part amounts of recoveries from bad debts, amount received in rupees, not in other currencies, in rupees against import bills and held in these import bills which were held in sundry deposits pending receipts of final rates, and unadjusted balance of dividend warrants, interest warrants, and refund of application money. That's with regards to share capital, apportionment of profits, etc., and margins held as sundry deposits of funded facilities. This is funded facilities, not non-funded facilities. Make a note of it. And what are the inclusions in DTL were net credit balance in branch adjustment accounts, adverse balance in notes through mirror accounts, interest accrued but not accounted for. These were all the inclusions. That's it. And with regards to verification of assets, what we have to check for? We have done with all the internal controls. Now we'll move on to the verification of assets. First, with regards to the cash, banks, and money at call and short notice, what we have to check for? We have to check their existence and completeness on balance sheet. For the cash, physical verification of cash, including all types of cash, that is whether it would be cash in foreign currency or cash in ATM, cash at deposit machine, that is cash depositing machines. They also work like an ATM, but ATM is only for withdrawal. This is for to deposit our cash as close to balance sheet date. Cash balance physically verified should be equal to that. It should be tallied with the balance in CBS or cash register. CBS is a centralized banking system, core banking system. These are with regards to the cash. We have to check these points with regards to verification of cash. With verification of balance with RBI, what we have to check? We have to check the ledger balances to, that is the ledger balances of our system has to be conformed with bank confirmation certificates and reconciliation statement. These were mostly like a third party certification, third party confirmations. Special attention in reconciliation statement. As with regards to any kind of balances with RBI or other banks, what we have to check? We have to check for the reconciliations. What that reconciliation should not contain. It should not contain what? Interest, and it should not contain any bank charges. We'll see now. A special attention in reconciliation statements with regards to cash transactions remain unresponded. That one. That is, no explanation was given. Items requiring write-offs or adjustments, just as we have discussed about the interest and bank charges, right? Credit entries from RBI statement or remaining unresponded for more than 15 days. These are all the items that we have to take special attention in reconciliation statement. And banks balance with other banks. What do we have to check for? We have to check no debit for the charges and no credit for the interest, and no large transaction at the year end for window dressing. That also has to be checked for. And no station checks sent for collection are credited subsequently. And these were the things that we have to check with regards to balance with other banks. And money at call or short notice, what we have to check? We have to check whether there's a proper system for authorization and compliance of guidance laid down by HO. You see, call loans to the call loans that were taken by the bank has to be tallied with what? Again, third party confirmation, the certificates by the borrower, and the call loan receipts held by the banks. You see, this is call loans when we give to the other banks, and this is when we take call loans. We have to check for that. These are call loan balances. And aggregate balance in the register should tally with the control account as per general ledger, the control account as per the general ledger. This aggregate balance with regards to the money at call or short notice has to be tallied with what control account as per general ledger. Subsequent repayments should be equal to the outstanding amount at the year end. That is, all the amount that was at the year end, outstanding at the year end, has to be subsequently repaid or subsequently got collected. And check if the interest was properly or accurately accrued. That is, anything with regards to loans or things, what we have to check the credit worthiness. But money at call or short notice, that was mostly in between branches or in between banks, right? So we need not mention that point in specific. But what do we have to check is check the interest of that promptly accrued or not. And with regards to investments, what we have to check? We have to check its existence, ownership, and valuation. We have to check whether there was existing investment policy, and investment policies conforms with RBI policies and statutory provisions. The investment policies of the bank should not override or be contradictory to the RBI policy or statutory provision. They have to be in conform with that. And outline of investment policy for its own account and on behalf of customers. You see, banks do investments on two purposes. One with their own account. Second thing is that they do manage its customers also, customers investment. So they need to have two investment policies, one for their own account and second one for on behalf of their customer. That's what we call PMS. Segregation of duties as executing trades for that front office, and settlement and monitoring of trades in the middle office, and accounting is mostly done by the back office. So this is just with regards to the duties in the investment department, and reconciliation of investment account with what the our investment account balance should get tallied with the securities on hand, and confirmations to the counterparty banks for bank BRs, the bank receipts, and confirmation of subsidiary general ledger with public debt office. These all the things we have to get tallied for. With regards to acquisition or disposal of investment, it should be verified with respect to the broker's contract note. That is, when we do sale, brokers give a contract note at that one, and the bills of cost. When we purchase, the bills cost and the receipt. We have to check for that and verify the investments were made within authority and compliance of conditions that would restrict the right of ownership. What we have to do, we have to check the whether the investments made were within the authority of that manager or that officer or not, and the compliance of that conditions that restrict the right of ownership, like stop selling, etc. And the classification of investments were classified as HTM, held till maturity, HFT, it is held for trading, AFS is available for sale. Shifting in between them requires a board approval, that is shifting from long term to short term, or shifting between these classifications also require a board approval. Okay, if appropriate method of accounting followed and adequate disclosures if changed. And verify for NPAs if recognized income on receipt basis. If interest or principal is overdue more than 90 days, we call them as NPAs. And you need not remember this, but you have to write it here. We have separate section under bank audit only with regards to NPAs and sale of NPAs and purchase of NPAs. We'll discuss in detail there. And while dealing in securities on behalf of others, that is starting, we have discussed that there have to be investment policies for its own account and on behalf of customers. This behalf of customers is discussed here now. Where while dealing in securities on behalf of others, that's with customers, prior approvals have to be obtained. Prior approvals is like prior approval on whose behalf we are trading, and any material undisclosed liability from breach of any fiduciary duties. That is, duties like having a trust on. If you breach that, if the bank breaches that, what's the liability of that breach? And if bank's income is recorded fairly stated in financial statement on that commission or etc., whether they were recorded and fairly stated in financial statements. And the next, special purpose certificates relating to investments, maintaining separate accounts for its own investment account and its own PMS client account that has to be audited separately by external auditors also on behalf of other constituents like other banks. And the last point is the bank shall take half yearly reviews. We have seen reviews for yearly for the loans, the advances or the loans that have to be given, and for the investments, it is half yearly investment. And